Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me to discuss why volatility provides opportunity and the advantages for an advisor employing a models-based practice is Jeff Kilburg, CEO of KKM Financial. Jeff, great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. Wonderful to be here.
All right, Jeff, Q3 ended with some selling pressure in September. What are the takeaways and what's in store for Q4?
Well, you're absolutely right. And we did see a volatile Q3. We saw the VIX elevated once again. We saw some significant selling pressure in the month of September. I think that ended as we all, of course, are very aware of the election that's within 30 days. But I think more and more focus has really been put upon the fact that we need additional stimulus. And there's a lot of arguments on both sides of the aisle. But I think the market expectations for Q4 is that we will receive this additional stimulus. Will it be the timeline exactly? Probably not, Jill. But at the end of the day, the market is moving higher. The trajectory continues to move higher. But there were some significant themes that were revealed in Q3 that should persist into Q4, if not 2021. That's that sector rotation we've talked a couple different times about on Trade Talks, where you're seeing a little bit of rotation out of technology, and you're seeing some of the laggards, some of the industrials, some of these cyclical names that really fell out of favor. They're getting a little bit of love here going into Q4.
How much is the election impacting markets?
Well, that's a great question. And certainly it is sensationalized in every day of our lives when we're seeing debates, tweets, and whatnot. But I do believe that a lot of the noise coming around the actual election itself will be muted. I think the trajectory has really been put in place by the Federal Reserve. The central bankers globally, I think, is the overarching theme. But yes, we are going to be very, very busy, and it will be volatile. But we talk about this volatility. It's not time to hide underneath your desk during this volatility. It's time to embrace the volatility. And that's where I think you have the ability to become a little bit more tactical and really start to select sectors that should outperform, not just in the wake of COVID-19, but where we are in the interest rate environment, where we are globally from a central bank perspective of forced risk-on environment.
All right, Jeff, we talked about fundamentals, but now let's talk technical. KKM runs various ETF model portfolios, powered, of course, by Nasdaq Dorsey Wright, and how you can touch on the tactical rotation model portfolio and how it's currently positioned. It seems to be the go-to in this environment.
Well, Jill, it's interesting. The word tactical was kind of a frowned upon word for a couple of years as the markets just continue to rise slowly and grind higher. Now here in 2020, certainly in the COVID-19 environment, tactical is all the rage. So it's really wonderful to see how dynamic and active have come back into an investor's mindset. So we look at our KKM tactical rotation model, which is powered by Nasdaq Dorsey Wright. It's on its 11th trade of the year. So very active, very dynamic. And right now the allocation certainly still has tech. We also are seeing industrials. That's the latest trade update for the model. So IYJ got put into the model just recently, and that really speaks to the fact that you are seeing this rotation, not just fundamentally, but the technical component. Of course, Dorsey Wright, Nasdaq Dorsey Wright is the relative saying guru. They really rely upon point and figure analysis to try and mute the noise and really let the model, which has been up and running since 2002, let the model determine which sectors you stick with and which sectors you stay away.
Model portfolios continue to be a theme that advisors are embracing. So what's the most significant advantage for an advisor to implement a models-based practice?
Well, Jill, we live in a world we're always seeking alpha, right? So that's first and foremost. But remove that to the side and really focus on what does an ETF model portfolio provide you, the advisor at your practice. It provides you a consistent, repeatable investment process, which certainly compliance is going to love, but it allows you to scale. And when you implement a models-based practice, there's no dispersion between your various accounts, but it also allows you to simplify and scale that practice by having that consistency, by having that investable and repeatable process built in inherently into the ETF model portfolios.
All right, Jeff, great to see you as always. Thanks for joining us on Trade Talks.
Thank you, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.